when I look out my window.
Hello traders, Gary Wagner with the Gold Forecast here. Approximately 11:30 here in Honolulu, Hawaii. It is May the 5th, Thursday, and this is the Daily Report. Obviously, major sell-off in the metals markets today. We had gold trading down to a low this morning of 1430 and change. We'll look at the data box to get an exact print on it. Currently, spot COMEX have closed. Another half hour before they open. Settlement 1472.88. We are looking at a daily chart. This is the chart that we look at each day. Channel lines, Elliott wave, and Fibonacci retracement. What are we seeing? Well, as you know, my sentiment was the reason we took this high-risk trade the other day, one, and secondly, the reason that I recommended that you provide only half of your trading capital behind this trade and reserve it for a dollar cost average was in case this market went lower. Now, honestly, my belief was that even if it went lower, I thought we would find some really good support in this area. This is at 50% retracement. This is 1480. You can see it is utterly broken down below that point. There's no doubt about that. But here is what I do find interesting. When we look at these bottoms right here, this bottom right here, and we carry this channel line up, what you'll notice is that we have the market trading at just that channel line itself. You can see where this low is hit. So my question is, have we been able to wash all of the weak longs out of the market in such a way that we have found an actual bottom in the market? That is going to be the topic and what we're discussing here on today's daily report. Now, I have gone ahead and blown this chart up so we can take a closer look. I've also added one more Fibonacci retracement level. This is the 61% retracement level, and that's pegged at 1458, 1481, and 1503. Obviously, I had believed that 1503 would probably hold. In fact, it did not. Nothing could be further from the truth. It broke through that point, and when it did, it absolutely traded down hard. Now, the question remains, where do we think this market's going to bottom? Markets don't go straight up, nor do they go straight down. Secondly, one of the reasons that we reserved half of our trading capital was for two possible scenarios. This is one of them, that the market triggers massive amounts of stops. We get a long liquidation in the market bottoms at some point, and we have capital to get back in and capital to trade this market back up. The second, which is what I was hoping for if in fact the scenario played out, and that would be that our stop held, and that stop of course was at 1475. It did not, but the stop held, and it would bottom somewhere above that point, and then we would simply add to the position. That wasn't to be the case here. Now, when we look at where this channel line and this particular area cross, you notice that it is very, very close to the actual low that we saw today. Also, this type of liquidation, when you have a market that has a parabolic rise, you can have a parabolic fall. My personal sentiment is we certainly are not looking at a price bubble. I believe that price that gold and silver have been trading at, although they became inflated at the end, is still due to intrinsic value. And therefore, I believe that these corrections will simply wash out the weaker players. The stronger players in the market are going to profit from it. Now, I think one of the best ways to take a look at this marketplace and the trading activity that we witnessed today is to really expand it. We're looking at a 15-minute candlestick chart. Each candlestick represents 1/4 hour in time. And as you can see, this is the market trading at around 1540. This is that first sell-off right in here. We get our drop, and we get our drop to the first Fibonacci level. This is the level that we were looking at. This is the level that we entered at. The market actually did move higher after we put that trade on and sidelined, but that was not to last too long. As you can see, this is the market as it opened up today. And so what we saw is you had some selling pressure coming into that in the evening session just prior to the open of the day. The market did rebound, very, very short-lived, and then we had this massive sell-off. Now, in terms of what we saw within that sell-off, this is that low print, and to actually see where the market went in terms of a low, we'll simply put up our data box, and that will give us an idea of what the low is on today. So what we were looking at in terms of a low print, that would have been 1462. So we want to keep that number in mind, 1462. Now you can also see at that point when we look at this chart in terms of any kind of a candlestick pattern, again, we do get that variation that I look for, but this is very, very short term. I need to see this in a much wider chart in terms of time parameters, but you can see that the market did bottom as it's sitting roughly right now about $10 off of the low today, and the marketplace itself will open again in about 15 minutes, so it should be open by the time this report is published and goes live. My sentiment, traders, is that I believe that at the point when it is going to be reported to be the most bearish, when Chicken Little says the sky is falling in, that's probably going to be the bottom of this marketplace, and that's going to be the point in which we want to take that other half of our capital that we reserved and enter that into the long side of the market and recoup what we lost on the trade today. We are still overall on the year, we're ahead of the game, but we significantly ate into some of our profits. But this is the kind of scenario, traders, that really is very, very difficult, if at all possible, to foresee. We were looking for a correction. We got the correction, but the truth is no one that I'm aware of was looking for a correction this steep. Facts are facts, and this is where the market stands. So my recommendation is still going to be to look for a point of entry, and that point of entry, I believe, is going to be within either this afternoon, today, or tonight, maybe tomorrow. We'll have to see, but we'll have to see if there's continued selling, because if there is not, this is the hourly chart that we're looking at right now, and you can see that in terms of the formations that I look for, it's got a classic Three River Morning variation. It also has a very, very nice star in the center of that, but here you absolutely don't get that follow through that I like to see. We need to see, in terms of the marketplace itself, a recoup or rebound. So that would be on this open here. We would have to start seeing some of these candles go red again, and that would signal to us that in fact we had found a bottom. So we're going to have to see if that is going to be the case. And then finally, you can see when I turn that into a 120-minute, we convert that to a 2-hour candlestick chart, we're still seeing that tentative bottom, but we absolutely, at this point, do not have that follow-through. So I need to see, as I said, this marketplace begin to recoup in the afternoon session. That's going to start in a little bit. If we see the market begin to trade up higher and move above the one retracement, that's the 61% retracement area, then I will feel comfortable. We will issue a buy signal. We will re-enter the market. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Friday for another daily report. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be that it's strange